A futures Ethereum ETF product has already been approved. Again, there's no substantive legal reason why the SEC should not approve. It's purely political. The SEC has until May to make that decision. If Gensler doesn't approve it, it'll end up in litigation again. And ultimately, there will be spot Ethereum ETFs. Gensler and the SEC should just approve it and not waste more months or even years and hundreds of millions of dollars of litigation expense. But again, that's Gensler's political decision, not really one based in fact and law.
What market structure problems are the biggest cause for concern right now?
There had been 4 or 5 major proposals that the SEC had put forth with regard to market structure. One of them actually was approved, actually on a rare 5-0 vote by the commission. The general theme of all of them is the SEC, without enough data, in my view, which is why they had the 605 proposal that got approved, without enough data and frankly without enough engagements of the industry, is making decisions and picking winners and losers in the market. And that's where I fundamentally have disagreed with Chair Gensler around these proposals, which is to say, what problems are you looking to address? And if there are perceived problems, what's the data, the economic analysis? We've got all kinds of market data apps. We've got all kinds of trading data. Let's get in a room and demonstrate to the industry and to us and collaboratively say, here's the problem that I see right now. Here's a solution for that problem. What Gensler has done is imagine a problem that doesn't exist and come up with solutions that, frankly, very few people in the industry have said that makes sense. And there's a lot of really smart people in this industry, in the equity industry, that have been, trading for an awful long time and have opinions about things that the SEC, in my view, has just completely ignored.
What concerns do you have about the SEC requiring proprietary traders that deal with government bonds to register as broker-dealers?
Are a market maker in the treasuries market, and we do it through our broker-dealer, right? So we are already fully registered. So this proposed rule that Gensler has put in place will not have an impact on our business. In fact, if I was thinking purely in a Virtuian fashion, in some ways it's a little bit of a barrier to entry, right? Because there are hedge funds and other firms that are customers of other broker-dealers that are competing with us in transacting the treasuries market, right? So we have the burdens of regulation and the cost and expense, all that kind of stuff. What the chair is trying to do is define behavior around markets and then force people to register. There are existing rules right now in terms of if you are a market maker, if you want to conduct business, you can avail yourself of becoming a broker-dealer. If not, you transact through a larger broker-dealer or bank, JP Morgan, et cetera, that provide private brokerage and customer services. And so you're taking a whole range of market participants. It might be a hedge fund, it might be a prop firm, and you're saying to them, if you want to continue to provide liquidity and potentially be a market maker in this industry, then you have to go through the burdens of registering. I'm not sure why, right? Other than, I think, again, there's a little urban mythology out there that somehow there are, bad actors in the marketplace that are not being surveilled, or that there's liquidity pockets or flash crashes or things along those lines. Again, where's the data to support that? Where's the economic analysis to support that? This is just government overreach and forcing registration that I don't think is necessary.
What is the strategic importance of becoming an authorized participant for all 11 issuers of these Bitcoin ETFs?
We have the benefit of being a market maker, so we don't have to make fundamental decisions on winners and losers. We're not a directional trading firm, so I don't have a fundamental view on digital assets, whether they're good, bad, ugly, it doesn't matter. What matters to me is that there are investors, retail, institutional, that want to have access to these products. And my job as a market maker and our service that we provide is obviously to provide that two-sided liquidity. Before approval of the spot Bitcoin ETF, spot Bitcoin is traded on a number of different venues. The vast majority of them, because of regulatory uncertainty in the United States, were outside the United States. And as a result, you had scandal, you had criminality, you had FTX, you had a situation around finance, you had other venues that popped up in Asia that were outside the scope of not only regulation, but sort of normal traditional finance, private brokerage, transparency, not commingling of funds. And so it was kind of the Wild West. So we dipped our toe in the water because our clients wanted us to, and we were prepared to be a market maker, but we very much were as you indicated, a strong advocate for approval of Bitcoin spot ETFs because we all know how that works. So you got, issuers, the registrations, broker-dealers, prime brokers, national security exchange, and centralized clearing. So all of the components of the Wild West have been eliminated because of this regularized system that we're all very, very accustomed to in the United States. So we were big advocates for that. As you indicated, we actually signed on with Gemini in 2012, believe it or not, to be an authorized participant of their spot Bitcoin ETF. It obviously didn't get approved. It waited until 2024. So for a dozen years, we've been sitting on the sidelines. And as you said, we now are an authorized participant in every spot Bitcoin ETF that's out there. That allows us to be a full-service market maker, to create and to redeem, and to keep the prices of those products in line with where they should be.
What do you think is driving demand for these Bitcoin ETFs?
It's a little bit of FOMO, right? I mean, people have fear of missing out on something exciting. I think there is some fundamental analysis that people do around these digital assets as an alternative form of value storage or currency, et cetera. A little bit like digital gold, a limited supply of these things. There's interest around it. And so as a, whether it's 90% retail today, 10% institutional, that ratio is going to change. And as wealth managers and other RIAs say to their clients, hey, you should take a portion of your net worth and put it into these alternative assets, the demand is going to continue to increase, which is, again, why we need to have that transactable in a more regularized manner.
How has the rise of AI impacted Virtu Financial?
In terms of how AI can make our business better, there's a lot of things as a large financial services firm around the middle and back office that we do that are self-rote and can scale and can use artificial intelligence. So we have a lot of, thankfully, younger and more thankfully, a lot smarter people than me within the firm. Our CTO is all of 41 and kind of really gets this. And so we have a lot of different initiatives around the firm.
Do new hires get free hockey tickets? How does hockey fit into all this?
Yeah, we give one game of free hockey. Actually, hockey is kind of an important part of what we do at Virtu because, as you indicated, Vinny and I own the Florida Panthers, number one team in the NHL right now. And so we're the hot ticket down here and in the NHL. The first time in my life I went to Madison Square Garden. The place was sold out, as it always is, but people were excited to see us come and play the New York Rangers. And we beat the Rangers 4-2, and we had about 20 people from Virtu at the game. 2 of whom were brave enough to wear Panthers jerseys in the Garden. I am not that brave. I've never done that and never will do that.